There's a woman in Texas. Let's call her Maria. Single mother, 2 kids, makes around $38,000 a year working full-time at a logistics company. Every spring, Maria does her taxes the same way her mother taught her. She goes to the strip mall tax preparer, pays them $80, gets her standard refund, and goes home. Last year, Maria left $2,400 sitting in an account she didn't know existed. The year before that, $3,100. The year before that, $2,200. Over 4 years, Maria has lost almost $10,000. Money she qualified for, that was set aside specifically for her, that was waiting for her to claim it. Money that would have changed her life. She isn't alone. Roughly 25% of Americans who qualify for this never claim it, and most of them have no idea it exists. This is small steps, big wealth. Today, we're not talking about money you spent or money you saved. We're talking about money the government set aside for you and then almost dared you to find. Stay with me. The next 10 minutes might be the most valuable 10 minutes you spend this year. The category I'm talking about is called refundable tax credits, and refundable is the magic word. Most people think tax credits just lower what you owe. Refundable credits are different. If you qualify, the government writes you a check. Even if you owe zero taxes, even if you got a refund already, even if you didn't earn enough to file, the money is yours. There are dozens of them: federal credits, state credits, city credits, industry-specific credits. Some target families, some target students, some target workers, some target people who installed energy-efficient appliances. Many are stackable. You can claim multiple in the same year, and almost all of them require you to actively ask. The IRS does not call you. They don't email you. They wait. In the next 8 minutes, I'm going to walk you through the 4 most commonly missed, the ones that cover the most people with the biggest payouts. By the end, you'll know exactly which ones to check. Credit number 1, the Earned Income Tax Credit, or EITC. If you worked in the last year and earned less than around $66,000, depending on how many kids you have, you probably qualify. And the credit can be worth up to $7,800. Yes, sir, almost $8,000. Refundable. Cash in your pocket. The IRS estimates that around 20% of people who qualify for the EITC don't claim it. Every single year, they're leaving an average of $2,500 on the table because nobody told them, or because their tax preparer didn't ask the right questions, or because they didn't file at all, assuming they didn't have to. The fix takes one website. Go to irs.gov, search EITC Assistant. 5 minutes of questions tells you exactly how much you qualify for. Even if you didn't file last year, you have 3 years to claim back credits. That means right now, if you qualify, you could file for tax years 2022 through 2024 and receive up to $20,000 in retroactive payments. Credit number 2, the Child Tax Credit. If you have a child under 17 with a Social Security number, you may qualify for up to $2,000 per child. Of that, around $1,700 is refundable, meaning you get cash even if you owe no taxes. And there's a sibling credit most people don't even know exists: the credit for other dependents. If you support a parent, an older child in college, or any qualifying relative, that's another $500 per person, stackable, both at the same time. Most tax software walks you through these automatically, but only if you tell it about every person in your household. A surprising number of people skip listing a grandparent they help support, or a college-age kid who still lives at home. That's $500 walking out the door for nothing. Credit number 3, the Savers Credit. This one is wild, and almost nobody talks about it. If you put money into a retirement account last year, an IRA, a 401k, a Roth, and you earned less than around $76,000 filing jointly or $38,000 single, the government gives you up to $2,000 back just for saving. Yes, they pay you to put money away for yourself. The credit can cover up to 50% of what you contributed. So if you put $1,000 into your IRA, You might get 500 of it back as a credit. It's free money to save your own money. Less than 10% of eligible filers claim it. Most have never heard of it. Check Form 888 next time you file. Or just tell your tax software you contributed to retirement. It will calculate automatically. The Savers credit alone has paid for some viewers' entire summer vacations. Credit number 4, your own state. Almost every U.S. state offers their own version of the federal credits, and many add credits the federal government doesn't have. New York has a property tax circuit breaker. California has a young child tax credit. Illinois has an education expense credit. Colorado pays you cash if your income hits certain thresholds, sometimes hundreds of dollars per family member. Google state tax credits plus your state. Spend 10 minutes reading. You'll likely find at least one credit you qualify for that you've never claimed. Many can be claimed retroactively for up to 3 years. Here's the system. 3 steps. Total time, under 30 minutes a year. Step 1, every February, go to irs.gov, search credits and deductions, and read the list. Just read it. Many take less than 2 minutes to evaluate. Step 2, use free tax software like Free Tax USA or Cash App Taxes instead of strip mall preparers. The good free software asks you every credit question by default. The cheap human preparers skip them because they're paid by the return, not by your refund. Step 3, Marnie, if you're not sure whether you missed something in past years, you can file an amended return going back 3 tax years. That means right now in May 2026, you could still amend 2022, 2023, and 2024 returns. 3 years of missed credits, potentially recoverable. I want to come back to Maria for a moment, the single mother in Texas who lost $10,000 over 4 years. Maria isn't bad with money. Maria isn't lazy. Maria isn't stupid. Maria simply didn't know what she didn't know, and the system she was part of had no incentive to teach her, because every dollar she didn't claim was a dollar that stayed in someone else's budget. There are about 72 million Marias in this country right now. People working hard, paying their taxes, doing what they were told to do, and quietly losing thousands of dollars a year because the rules were never explained to them in plain English. That is the silent earnings problem. It is not a small thing. Over 10 years, the average underclaiming household will lose somewhere between $15,000 and $30,000 in credits, refunds, and benefits they qualified for. That is a down payment on a house, a year of college, an emergency fund that would change everything, real money, real life, quietly missing. You aren't going to fix all of that today, but you can stop the bleeding starting now. If anything in this video made you pause and wonder whether you've been one of those 72 million, that pause is the work. That pause is the whole point. Tonight, you don't need to do anything dramatic. You just need to write down 3 things to check this week: the EITC, the Savers credit, your state's program list. 3 searches, maybe an hour of work, maybe thousands of dollars back. This Wednesday, we go in a different direction. Because while the government quietly holds money that belongs to you, your bank is quietly taking money that belongs to you, in fees so small you've stopped noticing them. The average American is paying their bank around $240 a year just to exist. We'll find every one of those fees and we'll kill them. Wednesday at 9 p.m. Eastern. If small steps make sense to you, if quiet, unglamorous, real progress is the kind of progress you can live with, this is your channel. Until next time, small steps, big wealth.